Hey everyone, thanks for joining me. My name is Robert McDougall. I'm with McDougall Insurance here in Norman. And what we're going to do today is we're going to go over 3 reasons that someone should consider a whole life policy. So we're going to get into that. Stay tuned. Hey there again, this is Robert with McDougall Insurance. So whole life insurance, what is that? So first off, whole life is like permanent insurance. Permanent insurance is like whole life insurance. What I'm talking about today is just your basic whole life, permanent insurance, whatever you want to call it, policy. So I'm going to call it whole life from here on, but it's the same thing as permanent insurance. So just to get that out of the way. So what is whole life insurance? Well, it means when you buy the insurance, it's designed to be there with you your whole life, right? As long as you pay the premium, it's designed to be there until you A, don't want it, or B, something happens to force a claim, which is typically death. But the thing is that with whole life, a lot of people have it, they keep it, but then they let it go. So I'm just going to give you 3 reasons you should look at it. It's different than term, so understand term, you're getting a period of insurance, so it's pure insurance. Whole life, you're getting insurance as of the day that you sign the policy, the age and health you were in then, and it continues as long as you will pay the premium. So reason number 1, let's see, I don't have it off the top of my head, but yeah, so okay, reason number 1 is it's permanent insurance. So why that's important is because permanent insurance is going to be there in the event that something happens. Like if you come down with the illness or whatever the case may be, you've got permanent insurance already. So you're not going to have to try to go get life insurance after the fact, after you've been diagnosed, or God forbid, whatever the case may be. But yeah, so basically number 1 is permanent insurance. You have it, you're insured. As long as you pay the premium, like I said, you continue to have the policy in force. So that's good. So in other words, if you have a whole life policy from, let's say, the first year you were born, or your 20th birthday, one or the other, and you came down with a illness or something to that nature in your later years, say 45, which I'm not saying 45 is old, but just later from birth or 20. But basically, you're looking at 2 different premiums, 1, and 2, you're looking at possibility of not even being insured, via later, because of some illness or whatever the case may be. So it's good to be proactive if whole life is the policy you're looking at. Again, I'm just talking about a whole life policy and the basic structure of it. So as long as we're clear on that. Okay, so number 2 is going to be the idea that a whole life policy will gain cash value. What that means is that when you put money towards that policy every month or every year, however it is you pay the premium, a portion of that goes set aside and builds as what's called cash value. So if you have a whole life policy, just a basic whole life policy, it is going to, by default, build cash value over time, and that's something that one could tap into and pull out tax-free because it is paid after tax money. So that's beneficial. Now, I know that, I don't have the following or anything like that close, or, it's black and white, but Dave Ramsey, he doesn't like whole life insurance. I see what he's saying, I understand what he's saying, and I'm not totally against what he's saying, but I think he's putting that same perspective on the same person. Because if you take that idea that he has, which is buy term life insurance, invest the difference that whole life would be, that could work. It could work. Most people don't look at whole life insurance as an investment vehicle. He also advises people not to get credit cards because people will not have the pain of handing over cash and getting, their change after that. He says there's a pain point handing cash and getting less. There's no pain point in plastic because it's just kind of neither here nor there. Which everybody's different, but I totally disagree. I mean, if you have a credit card and you're very prominent with it in regards to what you do and don't spend, and you've got a budget and you stay within that budget, and you do take into consideration every time you swipe your card, and you use it more like a debit card than a credit card, you'll, one, build credit, which is good, because credit is going to give you more opportunities down the road. And three, I said one and then three. Okay, one and then two. So number two is you can get cash back from these companies. Now, like I said, everybody's different. There's an average, credit card loan per family in America of like $8,000 or $12,000. So everyone is different than, say my approach. I guess what I'm saying is it doesn't make sense to have someone who can't help themselves but spend, and also expect that same person to take the difference within the whole life policy and invest it every month for years and years and years. That's my argument. Other than that, I agree with a lot of what Dave Ramsey says in general about a lot of things. So that's, number two. Number three thing is your premium is set at the age you take out the policy. So in other words, if you took it out at 23, your rate is at age 23, and also based on your health at that time, that's going to continue to be the same, or it should in a nutshell, throughout the entirety of the life of the policy. The policy should, no matter what happens in regards to your health, stay in force as long as you pay the premium. So it's good in the sense of getting it early and being proactive, because the younger you are, one, the healthier you are typically, and two, the better rate you're going to get with any kind of policy in regards to life insurance. So with whole life, you can get a set premium for the remainder of your life. And I'm just talking about a basic whole life policy. So no investments, no nothing like that. So those are my three reasons that you should look at a whole life policy. I know I probably jumped around a little bit more than I wanted to, but I was just trying to kind of give you an idea of where I'm coming from, because these are all my opinions. But if you have any questions or anything, feel free to email us or call us, text us. All the information that's coming up on the screen goes right to our office. So we would love to help you if possible. If you have any questions, comment below, subscribe, do all that stuff.